Our stock of the day, it is DroneShield. Now, the counter-drone tech company signing a $25 million contract with the US Department of War. It will provide mobile and fixed counter-drone solutions, including hardware, software subscriptions, warranties, and support services. Chief Executive Angus Bean saying defence needs continue to evolve and is flagging momentum. It's seeing in the US the share price heading higher on that news. Overall, of course, it is up more than 140% over the past year, just sort of flattened out more recently. But Luke, how are you seeing it?
Yeah, look, I mean, DroneShield, it's such a hard stock to talk about. Look, fundamentally, though, let's take a step back. We know all of the issues that's gone on with it. We know the management turnover and the issues around what happened there. But there is a real fundamental business here. I mean, just having a look for the program this morning, Andrew, they did $217 million of revenue last year, turned that into about $30 million of operating profit, which, by any metric is a really good result. The problem, obviously, is the thematic of defence and drones doing a lot of heavy lifting in that valuation. Creeping up towards a $3 billion valuation. Like I said, around that 30 times operating earnings is solid, but that puts it on about 100 times earnings relative to that market cap, even coming off from that peak that we saw last year. Their first quarter result was pretty strong once again, but this is a business that needs to keep winning these sorts of contracts. So, while it is incremental good news, it's a bit like Pro Medicus and 4D Medical, which we'll talk about later, where, these sorts of contract wins, they're necessary. They're implied by the share price and the valuation right now. So while it's no doubt a positive, I wouldn't necessarily think it's a step change in the thesis for the business. I'll say it's a hold for the program, Andrew. As I said, it's a very tricky one to talk about. That valuation, it's just so high that your returns from here as a shareholder, that range of outcome is so variable. I do see a world where, we have these prolonged sorts of geopolitical conflicts. There's no doubt that drone warfare, is probably, unfortunately, the next phase of where the world is going. And so companies like DroneShield will no doubt be a beneficiary from that, and we're seeing it. As I said before, the problem being is that they need to really execute on that. And there is, again, that other side of the outcome where the fundamental business can never quite catch up to where that valuation is today, and you just have sort of some lost years as the share price grinds sideways or downwards. So I will say hold. I know it's a very exciting stock for people out there, but for me anyway, I have it in my too hard basket.
Yep, fair enough. Okay, hold for you. Now, Richard, you come late to the party. You've only just found out this is our stock of the day. So,
but DroneShield is definitely always, everyone's late to the party except for, it seems, the the former management. And for me, it just shows that you can have the worst corporate governance in the world, but if you've got something people want, they'll buy it. And it's quite interesting, that chart, isn't it? Because it's right smack bang in the middle of a trading range, albeit for 1 year. But it's definitely it's cashed up, like 4DM Medical, which we'll talk a bit about later. But it's cashed up. There is high demand for its product, and their genius was actually build it and they'll come. So they had the inventory ready. But I would say, for me, it's a trader's stock. It's make sure if you got in early, you take your costs out and let your profits run. Like playing with house money is all important, if you ask me. You would not be going into this thinking that it's a long-term investment. It's purely going to move, ebb and flow on trading. It's because fundamentals have departed the station. Outside of a pretty good cash holding, they've got 200 million or something in cash. They've got a lot of cash, and clear demand. So I would think that you would not be. On any metrics, it's expensive, but it's always going to be expensive.
Well, what do you make of Luke's point there? This really is the future of warfare, isn't it?
It's not the future, it's now. It's
we've seen that in Ukraine, now we're seeing it in the Middle East as well.
Well, it is the future of warfare, but these guys, DroneShield, they have a niche, but there's so many competitors. The question is, what is their IP? Can they hold on to it? There's lots of companies that have gone gone crazy at the start of their life cycle because everyone can see that thematic, but then there's a lot of filling in that needs to happen for the fundamentals to catch up with the valuation. That is inevitable over time. It cannot keep trading at these death-defying, because competition comes into the market. Read Joseph Schumpeter, like, this is fundamental finance, this is fundamental economics. These guys do not have the greatest barriers to entry from my limited understanding, but they do have a first mover advantage. How long that first mover advantage lasts is the question. That's what I just would not be. It's not a buy and hold. So it's a take your profits out.
So you would sell now then?
I would, if I'd got in, I would be taking my costs out and then keeping an exposure. That's what I would be doing.
Yep. Okay. All right. Well, that is the view on our stock of the day, DroneShield.